Hi guys, I hope that you're all doing well. In today's lesson, we'll discuss basic accounting concepts that you should know. These are important as they'll help you with different ways, for example, to understand businesses, to manage money better, as well as to prepare financial statements. These concepts are used in income statements, balance sheets, as well as cash journals. Number one, we have accrued expenses or expenses payable. These are expenses that the business has to pay at the end of the financial year. In simple terms, the business has used something already, but they haven't paid yet. For example, a business used electricity in March, but they only pay the bill in April. Those are your accrued expenses. Now let's try accrued income number 2. This is income that is still owing to the business at the end of the financial year. In simple terms, the business earned the money, but they haven't received it yet. For example, let's say a customer bought goods on credit and still owes the business 2,000 rands. Okay, let's do number 3. What is an asset? An asset is an item of value owned by a business or a person which helps make profit. In simple terms, it's something valuable that the business owns. Different examples could be a delivery van, cash, or computers. Number 4, we have bad debts. What are bad debts? These are debts that are written off because debtors are unlikely to pay. In simple terms, money customers owe that they'll probably never pay. For example, a customer disappears without paying 500 rands that they owe to the shop. Let's go to number 5. We have cost of sales. So cost of sales basically means the cost price of all goods that were sold. In simple terms, what the business paid for the items to be sold. A simple example, let's say a store buys shoes for 300 rands and sells them at 900 rands. The 300 rands is the cost price. Okay. Number 6, we have creditors. Creditors are people or suppliers the business owes money to. In simple terms, the people the business still needs to pay. In a simple example, you could say a furniture supplier waiting to receive payment from the business. Number 7, we have debtors. Debtors are people who owe the business money for goods bought on credit. In simple terms, customers still need to pay the business. For example, let's say a customer bought a phone on credit and still owes 1,500 rands. That is a debtor. Number 8, you have depreciation. Depreciation is the decrease in value of fixed assets over time due to use. In simple terms, things become less valuable as they get older or the more you use them. For example, a company car bought for 200,000 rand may be worth 150,000 rand after a few years because they keep on using the car. Okay. Number 9, we have income received in advance. This is also known as deferred income. So income received in advance is income already received but meant for the next financial year. In simple terms, the business got paid before doing the work. For example, a gym receives membership money for the next year in December already. This video was probably brought to you by Kamu Cooks. Looking for fresh, delicious home-cooked meals made with care? Kamu Cooks has you covered. Whether you're ordering for one person, a couple, a small group, or even a huge event, they prepare mouth-watering meals that are packed with flavor and made to satisfy. The menu includes tasty options like Greek yogurt berry bowls, egg with roasted veggies, chicken and navel wraps, and so much more. Perfect for lunch, dinner, events, celebrations, or simply treating yourself to a quality homemade meal. To receive the full menu or to place an order, contact them via email at kamukooks@gmail.com. Let's go to number 10. We have liability. What's a liability? This is money owed by a business or a person to another person or a business. In simple terms, debt that the business has to pay. A simple example could be a bank loan of 50,000 rands. Okay, let's move to number 11. We have loss. What is a loss? A loss occurs when expenses are more than income. In simple terms, the business spent more money than it earned. A simple example, the business earned 10,000 rand but spent 12,000 rand. Okay, Let's go to number 12. You have markup. What is markup? This is a percentage added to the cost price to calculate the selling price. In simple terms, this is extra money added to make profit. For example, a shirt costs 100 Rand and the shop adds 50 Rand profit, so it sells for 150 Rand. Number 13, we have owner's equity. So owner's equity is the net worth of the business, which is assets minus liabilities. In simple terms, what is left after subtracting debts from what the business owns? For example, we could say, let's say assets are equal to 200,000 Rand and your liabilities are 50,000 Rand. The owner's equity will be 200,000 Rand minus 50,000 Rand, which is 150,000 Rand. Okay, let's go to number 14 of prepaid expenses. Prepaid expenses are expenses that are already paid but for the next financial year. In simple terms, the business paid early for something that will be used later. For example, rent for January is paid in December already. Number 15, we have profit. So a profit is when income is more than expenses. In simple terms, the business made more money than it spent. A simple example, let's say income is 20,000 Rand and expenses are 15,000 Rand. Your profit will be 200,000 Rand minus 15,000 Rand, which is 5,000 Rand. Let's move to 16. We have trading stock deficit. So trading stock deficit is when the physical stock counted is less than the stock figure in the books. In simple terms, some stock is missing. Let me think of an example. Let's say the books say there should be 100 cold drink bottles, but only 90 are counted. Meaning the business, when you check the books or the statements, they stated that there should be 100 cold drinks, but when the people count the stock, there are only 90 cold drink bottles that are available. Okay, and lastly, we have trading stock surplus. So this is when the physical stock counted is more than the stock figure in the books. In simple terms, there is extra stock compared to what the books show. For example, the books show that there are 50 soccer balls, but 55 are counted physically. And these are your basic accounting concepts. I'll do more videos and I'll also upload more accounting videos. Thank you guys for watching. Please like and subscribe. I'll see you in the next video.